Hi, this is Carolyn Larsen-Wieber, and this is my video on the CARES Act, the retirement plan provisions, and you need to act before July 15th. So the reason I'm doing this video is because I got a client who called me. He's the son of one of my older clients, and he has received an inherited IRA from his grandmother, and he said, Carolyn, should I take my RMD this year? I've just heard that you can actually suspend it. And that was a great question, and it does apply to a lot of you. So I thought I would just put together this instructional video. So this really brings to mind a quote from Jerry Seinfeld. I know there's a lot of Jerry Seinfeld people who watch episode after episode, you know, like my husband. He loves Jerry Seinfeld. So I'm going to read a quote from Jerry Seinfeld, and it says, "The IRS, they're like the mafia. They can take anything you want." And sometimes I think you feel that's true, but it's my passion in life to make sure that you keep more of your hard-earned money. And that's why I created my firm, because I have a passion about saving taxes and doing financial planning. So make sure that you follow this video to the end, because if you want to save hard-earned money from your retirement account, then listen up. What are we going to cover in this video? There's three things we're going to cover. We're going to cover what's that one provision in the CARES Act that's going to save and preserve your retirement money, why you need to act now and for what reasons, and what do you need to do next if this applies to you. So let's get started. What is the one provision? So the CARES Act was signed into law March the 17th, I believe. And there was a provision in there that said if you have RMDs and you're taking RMDs, you can actually suspend them for 2020. That's the one provision. And so what qualifies? What kind of an account would you have that you'd be taking RMDs from? Well, number one, if you're taking RMDs from a IRA. Number two, if you're like my client there who's has to take RMDs from his grandmother's inherited IRA, or if you're having to take RMDs from a 401k. So those are the three plans that relate to this provision. So why do you need to act now? Well, in that provision, the IRS has extended what we call the 60-day rollover. So if you took RMDs in 2020 from February 1 to May 15th, and you want this provision to apply to you, then they've extended the 60-day rollover. And so if you took those RMDs between that time frame, you have until July 15th to act, to what we call roll it back, 60-day rollover. These rules are pretty complicated, and you need to consider some other facts, and those other facts we're not going to deal with in this video. So if this applies to you, you've already taken some in 2020, you need to call me, you need to contact your CPA and have them help you walk through those rules. So why would you need to do it? Well, you want to reduce your tax burden, right? Normally this would be included in your taxable income. Number two, if you don't really need the cash, you have other sources of income to cover your living expenses. And three, you have to remember how it's calculated. So the RMD is calculated based on the December 19 balance. And remember what was going on in December of 19? We were actually at the peak of the market. So your MD was calculated at the peak, but yet you're taking it where it's low now in 2020. So you might want to just forego or suspend it and let that market, recover. And let's see. The last thing is, what should you do next? So if you've already taken some RMDs in 2020, what you want to do is, consider rolling that back and making sure to see if it qualifies for the 60-day rollover. So call me and make sure. Then on a go-forward basis, if you're doing automatic RMDs, like on a monthly basis, you want to call and say, hey, suspend my RMDs for the rest of the year. So those are the 3 things that we covered in this video. What's the one provision that is in the CARES Act that will preserve your retirement income, and what plans are included, so why you need to act now, and what you should do next. So I hope you've enjoyed this video. Hopefully it's helpful. If this applies to you, you need to call me or email me so we can go over it and make sure, all of the T's are crossed and the I's are dotted, because a lot of the RMD rules are very complicated. Because if you mess up and you don't take an RMD, the penalty is pretty big. It's 50% of the distribution. So if you took a distribution of $5,000, the penalty, if you should have taken a distribution of $5,000, the penalty is half of that, $2,500. So if you know somebody else that this might apply to, please share my video. I love it. I love it when my clients share it. It just fills my heart, and it's my passion. So Jerry Seinfeld, he doesn't really know Carolyn Larsen-Wieber is in the house.